Hi all. So fresh new union budget got announced today. Nirmala Sitharaman is back with a bang with her 7th union budget presentation and the market has crashed. But behind all of these major important headlines, there are a lot of things that you should be knowing as a stock market participant, and that is what this video is about. And in this channel, you'll be getting the best and most practical finance content in India, so get subscribed if you're not already. This is Ajay Ajith. Let's get started. So yes, let's get into the presentation right here. So the important changes in budget 2024, only the ones that you should be knowing about, right? So yes, let's look at the first thing that the finance minister announced, which were the 9 priorities for the union government this year, right? And we'll quickly go through the key highlights and focus areas. So agricultural transformation, employment and skilling, human justice, regional development, manufacturing and services, urban development, energy security, infrastructure, innovation and research and development, and next generation reforms. Overall, these are the 9 categories of criteria that the union government will be prioritizing this year. That is what we understood, right? But then inside all of these, there are multiple factors that you as a stock market investor should be knowing about. In fact, I'll be putting a detailed article down in the description with possible sectors and stocks which might be benefiting. But this video is not for that. This video will understand what are the larger numbers, and we'll quickly get into the impact on investors as well as traders and my opinion on that. So yes, the larger numbers here. The first one is a change in standard deduction from 50,000 rupees to 75,000 rupees for new tax regime. Again, this exemption, as you might be knowing about it, already all of us have the standard deduction of 50,000 rupees whenever we are going to pay our income tax, but now it has been increased to 75,000. So this means your taxable income will go down by a further 25,000 rupees. And if you're calculating 30% tax on that, you can assume nearly 8,000 to 10,000 rupees is what you'll be saving. So yes, one more thing to discuss here, change in tax slabs. So when you're looking at the tax slabs, the percentages have not changed. But when you're looking into the exact income ranges for these slabs, they have slightly changed. So on the right, you can see the old tax rate and the old tax slabs here. On the left table, you can see the new tax slabs, right? So earlier it was 3 to 6 lakhs where 5% tax was charged. Now it is 3 to 7 lakhs. And you can see a similar change across the spectrum as well. Earlier, you used to pay 15% tax from 9 to 12 lakh rupees. Now you pay 15% tax only from 10 lakh to 12 lakh rupees. That, along with the standard deduction increase from 50,000 to 75,000, will make sure normal taxpayers, salaried individuals who are taxpayers, will now be saving an additional 17,500 rupees per year. So yes, going ahead, this year's allocation for capital expenditure remains unchanged. This is the exact same number that Nirmala Sitharaman had announced in the budget for February 2024. Again, there is no change here. But there is a revision of fiscal deficit target for FY25 to 4.9% of GDP. That is much lower than the 5.1% which was announced in February. So here, what is the government saying? We will spend the exact same amount, which is 11.11 lakh this year. But then the fiscal deficit, right, the difference between our spending and our earning, it will be reducing. So what is going to happen here? So generally, the government can do two things. Either they can increase their revenue or income, or they can decrease their expenses. And as we can see here, the government is not planning to decrease their expenses. So what is going to happen here? The government has to increase their income. And no guesses here. To increase their income, they have nothing else to do other than to increase the taxes, right? So overall, they've even announced that standard deduction decrease. So overall, they'll have to see the taxes go up so that the government gets more income and that fiscal deficit target remains lower and lower, right? So yes, it's a new world. Let's look at the changes for investors here. So the first major change for investors is the long-term capital gains will be increased from 10% to 12.5%. Limit for exemption has been increased from 1 lakh to 1.25 lakh per year. So what does this mean? This means for stock market participants, any security or asset that you hold for more than 1 year is considered as under long-term capital gains. So let's say you bought few mutual funds or stocks for 10 lakh rupees, and 3 years later, the price of that underlying asset went to 15 lakhs. What is your profit here? It is 5 lakh rupees. And what was the standard limit here, exemption limit here? It was 1 lakh rupees. So you had to pay tax for 4 lakh rupees worth of profit at 10%. So that would have been 40,000 rupees in taxes that you paid for long-term capital gains. But what has happened here? Now it has increased to 12.5% and the limit has also slightly increased, right? So on the same example where that person is having a 5 lakh rupees profit, now he has a 1.25 lakh deduction. That means he has to pay taxes on 3.75 lakhs worth of profits, and on that he has to pay 12.5%, right? Which is coming out to 46,875. So earlier it was 40,000 rupees in taxes. Now immediately it went up to 46,875 rupees. So what is going to happen here? The investments into the market might cool down, right? So as investors, it is no longer very thrilling to invest into the market right here. But again, this will affect any investments that you make, be it equity mutual fund, be it stocks, be it any land that you purchase. So let's keep that aside for now. It is generally the government has to meet their fiscal target deficit. That's why they're going to increase the tax on long-term capital gains. But I would say the daily workings of the market will be affected more so by the second point here, which is short-term capital gains will be increased from 15 to 20% on certain financial investments, and purposefully vague here. And we can assume, or we are getting data right now, that it means equity and equity mutual fund investments, right? So that means once again, if you were someone who had to pay 1 lakh on 1 lakh rupees profit, you had to pay 15% tax, that is 15,000 rupees. Immediately now that is going to 20,000 rupees. So again, an additional income for the government, and this is more likely to reduce speculation in the market, right? Now do you see what is happening here? Earlier the delta between long-term capital gains and short-term was 10 and 15%, 5% difference was there. But right now it is going to be 12.5% for long-term capital gains and 20% for short-term. So what do you think will automatically happen here? The government wants to incentivize long-term capital gains, or you holding an asset and not doing short-term speculation. And these changes are effective immediately. Any trade that you even make today, it will be coming under this new tax regime. It is applicable from July 23rd itself. Now let's look at one major other thing, which is changes for traders here. So two things are happening here. One is STT on options. The second one is STT on futures. So STT on options has increased. It has increased on nearly doubled, right? From 0.062% to 0.1%. And similarly on futures, the STT has gone up from 0.0125 to 0.02%, nearly double on all charges, but this will be applicable only from the 1st of October. So if you remember, based on this article that I'll show right here, the government had already increased the STT on futures and options, and their goal is to reduce the speculation, right? But I would say this is not as bad as we thought, because the rumors in the market were to control the very high rise in F&O trading in India, the government is going to introduce a flat 30% tax rate for futures and options income. They were also thinking not to keep F&O as business income, and more so you cannot have any deductions or even carry forwarding of losses on the F&O income. Again, all this did not happen. This were the expectations or the fears of market participants. But I would still say this is very impactful. If you are someone paying 10,000 rupees in STT, now it would go up till nearly 19 or 20,000 rupees, nearly double in charges just for STT to the government, right? So that is what is going to happen here. In fact, Nitin Kamath had given this data, right? We collected about 1,500 crores of STT last year, that is Zerodha alone. If the volumes don't drop and it's the same volumes that you'll be seeing, there will be an increase of up to 2,500 crores at the same rate. Again, it is not exactly double, but it will be very impactful for traders who are doing large quantities or doing multiple trades across the same day, right? So what is the government trying to do right here? They were trying to control the F&O market. They're trying to control the rally in the Indian stock market, and this is how they're planning to do it, right? Increase the taxes. They're not going to increase their expenses or decrease their expenses, but they're going to increase their income through the form of higher taxation. Now I'm seeing a lot of debates on whether higher tax is good or lower tax is good, but I would say for a normal individual, this budget is not much impactful, right? For a salaried individual, the tax deduction, standard deduction going from 50,000 rupees to 75,000, it is not impactful at all. But the biggest blows comes to the stock market investors. So that is something that you'll have to keep in mind. Again, we'll have to wait and see if this actually reduces the turnover in the Indian options market or even trading turnover. I don't think that will happen. Even in the last STT increase, we never saw the turnovers actually decreasing the way the government wanted. It is just another way for the government to milk the profits of profit-making investors, and we know that 90% of traders generally over in India are making losses, right? And to milk more money from them. That is what I am seeing right here. So one thing that you can do in general is to prevent over trading so that you don't end up paying the higher charges here. And you can also think about holding securities and stocks for longer, considering them as long-term capital gains instead of short-term capital gains. So yes, that's the summary for the union budget for traders. Let me know what you think about all of these moves in the comments down below. This is Ajay Ajith signing off with the best and most practical financial content in India. See you again with another video. Bye bye.